Hey everybody. When you're starting to analyze a trade, you need to check multiple time frames. You can't just check the one that you're going to trade on because there may be things happening in the bigger picture, right? In this video, I'm going to show you how to do a good top-down analysis using multiple time frames to make sure that you can specify and you can get a nice optimal trade entry after you've done your analysis. All right, let's get into it. It is September 17th, and we're here for time frame or multi-time frame analysis and the alerts. I wanted us to share, we're going to talk a little bit about how do we use multi-time frame to help us to decide which direction we're going, when to enter, all those good things, right? And of course, it's going to matter whether you're buying or selling. Let's go look at the charts. I did pick Meta. It is supposedly trying. One of the things I did put in there from Elite Options Trader is Meta supposedly going back up to 600 or going to 600. I'm not sure if it has it been at 600 since probably before it was split. It did. It was at 600 maybe before the split. Okay, so I want to make sure we're on different time frames. Now it doesn't matter what you're trading. If you or time frame you're trading. If you're trading for the day, you want 2 or 3 time frames that go along with the day. So if you're trading just daily, then just like you're trading 1 DTEs, you're gonna want to do the daily chart. You're gonna want to do probably the 1 hour chart. You might consider the weekly, but if you're just trading for the day, you need day related things. The daily, the hourly, maybe the 4 hour and you're gonna enter or exit on the 5 minute, 15 minute. You're probably gonna want those smaller time frames when you're trading something that's for a shorter time frame. And if you're trading for longer time frame, like we're doing our weekly credit spreads. If you're doing the weekly credit spreads, then you're going to want to look at potentially the monthly, the weekly, the daily, and then you're probably going to enter maybe, or most likely should enter those trades on the hourly time frame, right? I think I got all the time frames here. But as you're looking for your weeklies, you're thinking, okay, what did it do? We're starting at the highest time frame. Start at the highest time frame, and you're looking to see what action do we have going on the highest time frame, right? What action do we have going here? Meta, as we can tell on a monthly time frame, is bullish. Okay, then we look on to the weekly chart. Weekly, would we say bullish or bearish or neutral? Which would we say on the weekly? Still bullish. Seems to be consolidating some, but it's going higher highs. It doesn't seem to be as drastic, but it's still going in higher highs, right? We're still climbing because, well, of course, the weekly is based off the monthly, but you want to see what is it doing in the shorter term, seeing that you're getting ready to enter a trade that's going to go for just the week. Right, so what's it doing in our shorter time frame? Kind of consolidating, but you got higher highs, higher lows, and the higher highs are happening, but it's not as pronounced on the top as it is on the bottom, right? So if we were to do some of our trend looking, we're going to see that we've kind of got a trend going that's a pretty high rising trend. It's a rising. We see that we've got a rising, and it's not right trending per se. The top isn't rising at the same pace, or the higher highs. We do have them, but they're not as pronounced as the lower highs. Right? So we got a little bit of a rising wedge, double, potentially head and shoulders, or double top, kind of the same idea, or triple at this point. Looks like it's about to touch again. But it's coming, it could be coming to this, back to the broadening formation. Right, if we were to extend our broadening formation back out, I think that was based on something back there. Okay, so now we've looked on the monthly, we're bullish. On the weekly, we see that we're bullish. right? We do feel like we've got bullishness, maybe a little more neutral, but slightly bullish. Now let's look at the daily chart. I'm over here at the top left now. The daily chart. What do we see here? A lot of gapping is what one thing we see. Okay. We still, so in the shorter term, looking shortly, what do we see that as a short term, bearish or bullish?
I see bullish.
We still see bullish. Coming into some resistance, been touched a couple times here, touched again. So if we were entering a trade today on Meta, or we were looking to enter a trade tomorrow on Meta, what do you think we would do? What would you do if you had looked at the monthly, looked at the weekly, looked at the daily? What do you think you would do for your trade? We go look to see what is the ATR. What is the ATR on Meta on a daily basis, right? What is a daily ATR? And at this point, it's 13.6664. 13.64. That means Meta, if it just falls straight without stopping, it could fall $13 per day, right? We've got 60 of those, so we need about 5 straight days of falling off. Well, we know it's not going to do that, right? So let's multiply that by 2 or 3. Probably aggressive is 2, not so aggressive is 3. 3 times the 5 days we just determined. So you need at least 15 trading days, and that is if it continues kind of to, move, and people don't pick up, buy too many along the way. So you need at least 15 days, trading days. So, but you probably want to be more conservative because you're thinking about Meta. Meta's a strong company. It's not going to fall, but so far in a short period of time, and along the way, people are going to buy it back, So, but I would go out at least a couple of months but that means that you'd have to have a bearish idea on Meta. And you'd have to have an overall view of bearishness on Meta. And if you don't, then don't trade it to the downside like that, unless you're going to trade it to a support area like in here. Maybe you don't trade it all the way to 475, but you trade it down to 500. Because along the way, somebody's going to determine, oh, there's value at Meta at 500. It's at 538 right now. Somebody's going to say, oh, there's value at 500. And they're going to step right in there and buy it like they've done, like they did right here. And like they did back here. So you want to look at like the overall thing. What's your overall view of Meta? And is it realistic for it to go down 60 points? I mean, it could be. I'm not saying it's not. I'm not saying it's not. But we do see that it's been bullish for a minute. That doesn't mean it can't go back down because, of course, it's been there before. You would want to, you definitely trade the reversal. Definitely trade the reversal, but the reversal being you can trade it as puts going back down, or you can trade it as called credit spreads along the way and see, well, I'm going to trade it going down with credit spreads. You just got to, be mindful that if it turns back, and where could it go if it does turn back? That broadening formation is going to, provide some resistance up there too. Waste management, somebody who ain't going nowhere. It don't matter no matter what situation we're in, you're going to need the garbage pickup. Let's start with the monthly. What are your thoughts on waste management? What are you thinking about? How are you thinking about trading it? Close to the open. It's gone up it's a little over halfway filled. And the 50% mark is definitely resistance inside of a gap. The 50% mark is resistance inside of a gap. Okay, that 50% mark, which is right here in the middle. See, it went up to that 61.8. What's that called? The golden pocket, I think people call it. It went right up to that 61.8 mark and turned right on back. The bottom of the gap is going to be considered as support as well. What kind of candle is that? Upside down hammer, which would be called a shooter. And a shooter is a bearish candle. It says that there was a lot of selling pressure that the buyers took it up, but the sellers put it back down. This is a bearish candle. Okay, if it was up like this one, these two here are more bullish because they've got longer wicks on the bottom. There's a lot of buying pressure. This is kind of doji-ish because of that, but you got a long wick down here, which lets you know there was buyers trying to push it back up, and they did up to a spot. The buyers took it all the way up to 211. The top of this candle on what was it, yesterday? It went all the way up to 211, couldn't sustain there, and came back down and closed as a shooter. The shooter candle indicates more bullish movement subsequent. So now it has hit support. So your expectation would be that it would turn back, but you're going to want to make sure that you watch to see that it rejects, because it's been in this area a couple times. Make sure that it rejects and then go on with about your way. So we're looking here on the hourly chart. Now that you've identified that, you can look on the hourly chart to say, where is my entry? Where is my entry? And your entry would be the rejection of this. If you're feeling like it's going to go back up, then your entry is when it rejects off of this 202 area and it looks like it's leaving that zone. If you believe that. So as it rejects from down here as a support, then that's your key to let's go, let's rock on, rock on. I don't know really much about what happened with waste management. I just do know that as a company, we gotta have waste management. I would watch, for your time frame. So you'd go maybe call credit spread above 211. And then you see what it does here down at 202. Maybe you do a put credit spread. I'll flip over to the other screen at 200 or below. That way we can see, because there's support over here. Also, this was a big support there, which may be something that you look out for, that you look for the fact that there is another support right underneath this candle at 201. So this may come on down to the 201 and then reject. See how this big candle over here? And this actually goes down as low as 200 and some change. So it could go down that low. Let's see, where's our gap? Our gap is the close to the open. And that is sure enough still a gap. It's not closed. That's not closed. It could come right on down into there and feel that. Get some juice in order to go on up a little higher. I see you. That is a gap down there. Not filled. Let's see, what would we see on the put credit spread side if we were doing it for this week? Probability out of the money. We looked at 200. That's a 66%. I'd want to go one more down. Get a higher probability out of the money, 197.5. Don't know what kind of premiums are down here. Looks like $25 for a 2.5 spread. That's 10%. That's 10%. And if you did the iron condor and went above, what did I say, 211? 211, 212, that's a probability out of the money. Actually, probably might not have to go as far as that. 210 would probably be good. Let's see. Another $0. Yep. Nope. We don't want another $0. Nope. We don't want $0. Actually, it's more than zero, because this one here is 7. So if this one further away is $7, then this one next to it is not going to be 0. And then we've got 22. So let's say it's about $10 between those two. 10 to 12 is what it would be at 207. All righty. What do we do with our charting? All righty. So we start, as we're working our chart, we start our chart with our different time frames. We're looking for all the things. Notice as we're looking for broadening formations. We're looking for gaps. We're looking for candle patterns. Y'all see this on the monthly? I drew that broadening formation on the weekly, but look how it touched it on the monthly. I didn't even draw it on the monthly. I drew it on the weekly. I know that's the same material. It just is like, wow. And now we've got some waste management has some inside days working right now. And it's inside of that big 3 candle, inside months, not inside days. So this is the monthly chart. And what is an inside month? And you're probably going to ask that. What's an inside month? Basically means it has the candle, these candles have not gone higher or lower than the previous month. So this green candle is inside of the top and bottom of this red candle. And this red candle is also inside of this candle here. It's almost like the mother candle and the babies are on the inside. So many people who trade the strap would say, don't do anything with this until it comes out of this inside, until it breaks out of the inside of this candle, which means you wouldn't touch it till 225 or you wouldn't touch it till 196, right? Until it went above the top of this or below the bottom of that. There are people who would say, as long as you've got all this inside action, all it's doing is consolidating and bouncing around. So to wait for it to go on back, to go outside, to try to get outside of this big mama candle that happened, these two back here from the week of 715 and 722. So the thought then is that if you're going to trade it based on that movement in the middle, then you want to find actionable signals on smaller time frames. But just know, if you're going to trade it based on an hourly signal, then your trade is going to be 3, 4, 5 hours. If you're trading it on a daily signal, then you're going to trade it for, 3, 4, 5 days. You're trading it on the weekly, you're looking to trade it for 3 or 4 or 5 weeks. Time frame is going to determine how long you plan on being in the trade. And then what are your targets while you're in the trade? What are your targets? If you're entering the trade based on the daily candle, if that daily time frame is your entry point, if you're entering based on the daily, you're entering to exit the next day or subsequent day. If you're entering something for the day, you're probably entering based on a 15-minute candle or a 30-minute candle, and you're planning to get out that same day. Because you need to see the levels on the smaller time frames. If you're planning on day trading it, you need to see the 5 and 15 and 30-minute candles or 30-minute time frames in order for you to see your levels. Yeah, Netflix 711 is the all-time high, and we're currently at 706. Actually, I almost entered Netflix this morning and was like, oh, no. Once it bumped above 7, I was like, it's probably going to do some stuff. And then what did it do? It went on up all day. This is actually the weekly. The daily, though, it opened up at 700 and it closed up at 707. Sorry, close wasn't 707. Close was 706.91, almost 707. Still creating higher highs even in here. Okay, so we're looking now that we're on SPX. This is on the monthly. We're forming a hammer. What does the hammer look like? What does that mean? These last two both have long wicks. Our candlestick people, long wicks means these are like rockets. This is a hammer. Look at this monthly wick and the weekly wick. Let's talk about when you decide what you like and where you want to enter, right? So let's go pick us a stock. We can go look at Google, because Google actually been making some. Let's do a Google look. If you're going to do tomorrow, I would wait till after the announcement and wait till, if you're going to go at all, wait till after the announcement and see what direction it picks. Because usually, it enters at noon, the prices enter, and if it runs hard one way, then basically your trade could be breached before the day is even over. Hey there, trader. I think I've discovered why most traders are not profitable or are not consistently profitable. And that is the lack of charting technical analysis. Yes, it is a lost art, basically. We're looking at the chart. We see that the candles are going up and down, but not really knowing what is really happening. Everything you need to know, almost everything, like 99% of what you need to know, is in that chart. So I've created a training resource that is called Chart Your Way to 100K. It starts with the basics of what is a candlestick, all the patterns, all the things like that. Starts with the basics, and then it goes up from there. It includes candlestick patterns, chart patterns. It includes indicators, and includes what you should be looking at when you're charting, trend analysis, gap analysis, all these different things. Everything you need to go from no charting ability up to being a master charter, you can find in this Chart Your Way to 100K resource training. All right, you can go ahead and grab it at my website, educatortotrader.com. I promise you, this is going to make the huge difference in your trading consistency. All right, go ahead and grab it. Okay, so we're looking at Google. Looking at the monthly time frame. Let's look support resistance. First thing we do, support resistance. Do we see any monthly gaps that are jumping out at us? This is the monthly chart. I'm down here on the right. Close to open, close to open. Here's a little bitty one here that needs to be filled. It's G, which is a unit of measurement, by the way. Close to open, all of here. Close to open, we're good. Close to open, we're good. Good. Okay. That's all on the monthly. Broadening formation, do we see one? Looks like we can go with, this is the monthly. Swing high to swing high. I touched here. I don't see a swing low. I could hit these, but I don't like those as much. This is more trendy. This is more of a trend line. In here, more of a trend line. It's a trend line. Okay. Anything else jump out to us on the monthly chart? Do we think it's bullish or bearish? Do we see an actionable signal at the end of the current month we're in? What do y'all think this candle here means? We're currently in this candle, but what does it mean? So now we looked at I'm feeling like on the monthly chart, Google is bullish. It does seem to be dancing around inside this channel that is a rising wedge. Yeah, it does seem like it wants to go up some more though. Does have resistance at 183. So 183 could be a target. If you were entering based on here, 183 could be a target. Or you could say it's going on up to the top of this formation, and 196 up in this area, 196, 199 could be your target. All right. Coolie high. Now let's go look at the weekly chart. Let's go look at the weekly chart. We can put on some support and resistance. Got something happening in here. Some stuff happening in the 153 area. We kind of got these two picked up. The 129 area. And there is a little something here at the 166. Okay, so do we see any gaps that we need to identify? I do see a couple. We see gap between these two. Between these two, I see a gap. Close to open. Really, it's the green to red, close to open that came back down, close to open that was filled here, up at these points. Close to open, that's fine over there. This one here has been filled. Close to open. I'm looking at the gaps that are on the daily time frame. Now the daily time frame, even though here we were looking like we were in a rising, which are still in a rising, even on the weekly, we're looking like we're in a rising, but look at the daily. On the daily time frame, we're looking very bearish. Not looking as bullish over here as we were over here and as we were in the weekly. We're looking more bearish on the daily chart. Came right down to this gap, bounced off it, and went on up a little bit, but let's see. We were bullish all through June, March, April, May, June, and then July, first part of July, it's been falling off ever since. So now with this information, we have to say, okay, how do we trade this? Now this last candle seems like it has busted out a little bit, but it didn't bust out of it. Let me make it a little bigger so anybody who's looking on a small screen can see what's happening.
And
now,
then
what
it
I
would
did
have
was just connect swing high to swing high on a larger time frame. right? That's what I was doing, swing high to swing high. And then you gotta, of course, bring that down to your weekly to see what's it doing now, because now what it is now is at the bottom of that formation, now trying to come back to the top, because it has to pull back in order to go back up there. For the last 3 months, definitely it's been bearish. But overall bullish. Okay, 3 months even here. So now we're at the bottom of this wedge and trying to climb back up to go. Hopefully, I'm thinking it wants to go on back up here. To go on back up this way. Same thing with this long wick going back up this way. That's the hammer. So now on the daily, we see it's climb. It's left a few gaps in its wake though. So then depending on your time frame, you're thinking, how am I trading it? Am I trading it for the week? Am I trading it for the day? Am I trading it as a leap? Talking about Google, strong company, but you have to think about, what am I trading it? What's my time frame for the trade, and what's my entry for that time frame? So what I've heard is, if you're looking at the monthly chart, then you should enter on the weekly. If you're looking at the weekly chart, you should enter on the daily. If you're looking at the daily chart as your, what you want to trade days, then you should enter on the 1 hour chart, 1 hour or 2 hour chart. So you're asking yourself always, what's my time frame I want to trade this for? Which participant am I? And what is my target? What's my stop loss? What am I doing for stop losses? Now, credit spreads are a little different. To me, the credit spreads is kind of like a money-based stop loss. We can do them we also can do them as level-based stop losses as well. You're looking at the larger time frame setups, because you're not going to think, we had people who were like, we're trading something for 2 and 3 weeks, and then they're like, I'm on the 15-minute and it looks like it's reversing, I'm getting out. It's like, well, when's your expiration? Like, well, in 3 weeks. Well, you don't need to be on the 15-minute chart making exit decisions. I mean, you can watch the price action, but I've also been told to enter whatever time frame you're entering on, that's the time frame you're going to exit based on. So if you're entering a trade based on the daily price action, then you should exit based on the daily price action. If you're going to let your invalidation, if something's going to invalidate, it needs to invalidate on the same time frame. Okay, what do we see for, if we were going to trade Google, what would we see as a trade here? We can do seller or buyer. What do we see as a trade? Like there's a gap here on the daily. Another one. It's another one. And another one. I see a put credit spread. Since we have had some upwards movement, maybe put credit spread just above this, just below, sorry, not above, just below this resistance area of 157. Now this doji kind of gives you indication that it's not real sure which way it wants to go. It has come back and filled up part of this gap, so it may come fill the rest of it. That's going to provide some support, and we've got support here at 157. And if we're looking above here, we're at the 161, which is the bottom of this gap. Okay, let's go look at what would be from today. If we were looking, today for something at the end of this week. Put credit spread 155. I think we talked about 157, but that's 66%. Now it'll be a little closer than we'd want to be. 155. Now, your thought is, if you believe it's going to continue to go up, you could encroach in a little bit, but you'd want to be sure that it's pulling out of 157. It's a plus minus 3.7, and you're at 159. So if you're going to get right here, just out the money or at the money, you're going to want to be sure that it's continuing in the right way. But you do see that open interest and volume at this next strike down is pretty good size. It's the second to biggest, and then we've got some more down here at 150. Pretty high open interest compared to the other strikes, right? But now if you look over on the call side, you see that there's bigger open interest over here, which could mean there's more thoughts that it's going to continue to go on up, especially in the short term, right? A lot of volume, a lot of open interest over here. Continue to go with our put credit spreads. So 155, if you're, not feeling froggy. If you're feeling froggy, you could go with 157. Ooh, that's going to be scary. Going to be scary. Plus minus 3.7 really does put us at 150, 155. That would be safer as a seller. $23 for a 2.5 spread, but 157.5 gonna take in $54. Ooh, that means you need to want it needs to keep going. The thing is, now this is my drawback for the week, is in this week of FOMC, we really don't know how whatever is said tomorrow will affect stocks individually as well as the indices. It could affect individual stocks, which will in turn affect indices. So there, because of this big unknown, you're just kind of like chilling. I am kind of like chilling. Well, let me just see, going on in my sim to see what's going on. Now, if we're looking at, going back to the chart, if we're looking at Microsoft as a buyer, we just talked about it as a seller. Looking at Microsoft as a buyer, if it goes past the high here, the high of this is like 161 and some change. Let me see what that actually is. So let me act like I know how to find the top. The high is 160.55. This is 160.55. If it breaks above 160.55, then the thought is that we'll keep going and the target would be the bottom of the gap. That would be your target of 161. That's not, it's $1 away, right? And the bottom of the gap would be target 1. The middle of the gap would be target 2. And at the beginning and the middle, I'd probably, if I was doing it in calls, I would take my profits, because that 50% mark is going to provide some resistance. I would take my profits and pull on, unless you wanted to ride through a pullback and a try again. And unless you just, want to. Other than that, after 160.55, once it tops the high of this candle, that will be clear skies up until the top of this next one here, which is right at the bottom of this gap. That's trading it as a buyer. I think it's weird that the moving averages are so spread out like this. That is weird, how wide they're spread. It's almost like the moving averages are working with something else. Oh, this green one is turning back up to upwards. The green one is a shorter time frame. Okay, how do we set our alerts? That was the other thing for today. Let's say we're looking at Google and we want to enter above 160.55. You determine, you've looked at your weekly, monthly, all this stuff, and you say, okay, I like what I see here. I'm going to enter at above 160.55. Just picking that out now, right? Then you're going to be here. You're going to right click on the chart. Doesn't matter which one. Right click on the chart. And there may be another place to do alerts too, but I always do it in the chart. Right click on the chart, and then you see here where it says create alert. Create alert here. Once you right click on the chart, then you can pick create alert. And when you're creating the alert, it allows you to, you got your stock already, gives you that. You want mark, you can have at or above, at or below, below, above. You can, it says at or, I usually just leave it at one of these top two, but you can pick below and above. So let's say we want it at or above 160.55. At or above 160.55. And I usually write a note. When you're on the desktop, you can write a note. On your app, you cannot write a note. On your phone, like on your phone and tablet, you don't have the place to write a note. But I would say calls, entry. And if I'm trying to remind myself of the trade, I might say calls entry 160. What did I say was the target? Target at 161. So I might say 161 strike and then 920 expiration. Whatever it is you want to write. You can write whatever you want to write in there, right? Then down here, you've got to notify you. It'll notify you with, you can have it play a sound. You can send an email. It can send a text message. You can send a text message after market hours, which basically just shares a move. You can't do anything with the option. So if you were buying shares, you could use that one and send a push notification to mobile devices. I don't really know what all this is. I wonder if it matters if it's market or last. As far as price goes, close would probably be good. Okay, and then volatility, I don't do anything with this. I leave all that stuff alone. These settings will be applied to all alerts. And then under options, submit now, reverse, off, expire, no alert, not specified. When do you want it to expire? Says not specified. You can have it at a specific time. Like let's say it's only set for today. You could have it expire. You know, the alert can expire today. I should do that more often because sometimes I get alerts that I put on a while back and I don't know where they pop up and I'm like, what was this? Submit it now. Alert for reverse cross. I need to start doing that. Alert for reverse crossover because sometimes it crosses a place going up, but then you're thinking it's going to go out. But if it crosses back, you want to know that it didn't, that it didn't go quote unquote enforce, that it came back across. Okay. That's how we do the alerts. You can do them on your phone too. If you're looking at your app, there's a little bell there on the chart. There's a little bell with a plus in it. You can use it there. And that's, if I'm on the go, I may put that in there. But if I'm, usually I put my alerts here in the chart here. Yep. Okay, we got to look at Nvidia. Nvidia. Okay, so we're looking, starting at our monthly. We do know Nvidia has been bullish, but look at these long wicks here. It's pulled down some, and then the buyers step back in, but it's not been able to go much higher. The highest has been 140. It's not been able to blow past here, and then we've got what this lower highs, lower highs, lower highs every month for the last 4 months, right? Then we can look at the weekly chart. Looks like the moving averages are getting ready to cross or trying to. This has been consolidation-y, not really doing a whole lot. It's been between 92 and 132, not able to really push up above there. Let's put a line or two on here. We look back at the daily. It's just kind of bouncing between here. Let's see, do we have not really a great broadening formation here? Not really. Just been going up. What do y'all see as a possibility? Possibility. I think we got to wait to see what happens tomorrow, to be honest. But it's looking kind of snakish. See, we got this part of a gap here that's not filled all the way. A lot of doji in here in the middle. That the last couple of days, it just doesn't know what to do yet. So everybody waiting. Still waiting. Wait and see. Wait to see what happens and then ride it out after that.